Let's bring in Belpointe, their chief strategist, David Nelson. All right, David, it's interesting. For all the belly aching, right, I want about, AI and how big it is and how concentrated this market is. It is an AI world, though. I mean, we are moving toward an AI world. It's hard to dispute that.
It will translate to every, sector of the economy and virtually every industry. And the Walmart CEO makes testament to that. We're all going to use it. I'm using it. It's like having 2 or 3 research assistants at this point. I really believe what Jensen Huang said a few weeks ago when he said, you're not going to lose your job to AI. You're going to lose your job to someone who knows how to use AI. And I think that's what's driving the market. It's not, the problem is in the market. It's not even, the problem is in AI. There are other areas that we need to discuss, market structure.
Well, one thing that is being discussed a lot, 1929, the next crash. I mean, what do you think is driving this? I know there's a natural inclination. The market's made a big move to get antsy, right? That's human nature. But this is, we've had stretches where the market's been up 4, 5, 6 years in a row. Why do you think there's such a pile on right now?
They're trying to equate it back, to 1999 and 2000. And, we were back there back then. I remember the double ordering, the dark fiber. We're not seeing that right now. The demand is clearly off the charts. Even the stocks that have gone down, it wasn't about demand. It was something going on within the balance sheet or the income statement of that particular company. The demand was there.
Right. All right. You just kind of referenced the economy, though, because if you look at the stock market, the other parts, the cyclical parts of the economy, financials look pretty good, but, you got materials. Industrials were leading for the first 3 or 4 months. Energy is sort of lackluster. What is the market telling us about this economy?
Consumer staples was a real flag for me. And what I saw in the last week, it bothered me about the market structure. It was almost capitulation. The relative performance between consumer staples and technology in a 1-week period of time was almost minus 600 basis points. I don't know that I've ever seen that before. And like you said in the lead-in, we're still using toothpaste. We still drive up to the pumps. They deserve a spot, but it seemed like everybody capitulated to be the last guy into an AI stock.
I think of the 37 consumer staple names, only 4 are up this year for the last year, and only 1 double digits, and that's a takeover. Before we leave, though, these are the names that you like. General Dynamics, I think we've talked about this. I know you like that defense area a lot. MCOR and Lilly, let's focus on MCOR because this is a name that's not necessarily a household
This got whacked when they reported earnings. And you can look at the chart. You put the chart up there, you'll see that it just hit an all-time high. The expectations were through the roof. This is a data center play. It's another picks and shovel play, but it's not chips. They're building the data centers, so the construction component of this, the electrical workers for this. Order book is through the roof, 30% growth in the order book. AI doubled. The fact that it's down 15%, it's another gift. They did this in January. I'd say buy it right here.
Nice buying opportunity. My man. Great seeing you.
You're the man.
Good stuff.